This is a special podcast presentation from 700WLW.com. This is Casey Boland On Demand.
We have Casey Boland on the subject of money. When it comes to money, Casey, people are jumping ship from value stocks to growth stocks and sometimes back and forth. Let's lead this by defining both growth and value.
Well, a growth stock may be a technology company, or it could be, let's say an Amazon, for example, is a perfect example of a growth company, a company that continues to grow their earnings at a very, very fast pace. They're also considered what's called a momentum stock. Their stock has done very, very well in price. They've had great performance. Always do your homework before you invest in individual stocks, but we're just kind of giving a name of a growth company. On the value side of the equation, some people may argue a Procter & Gamble or some local insurance companies may fall into that camp where they're going to have more predictable earnings, but versus their growth counterparts are just not going to grow as fast of a pace.
So do you think people jump from value to growth just because, well, the headlines, we always highlight, the growth stocks on a regular basis?
Well, sometimes I do think that because they're sexier in some ways, and you do get big returns, but they can have big crashes as well. And this year, in fact, value stocks have greatly outperformed growth. It doesn't matter if you're calling large company stocks, mid-company stocks, small company stocks. There's a huge margin of difference. But it can get you in trouble if you chase performance. So what can happen is, as an investor, you open up your 401k statement, you look and you see growth names, you see value, and you're seeing the performance difference. And a lot of people will choose and say, well, I'm going to go with a hotter hand. So it may be value in one period of growth or another, but statistics show it really hurts your performance when you do that.
So what about long-term performance? If you're somebody who looks at value, looks at growth, and decides to try to jump back and forth over time, what tends to happen?
Yeah, there's some interesting research out there that shows that you look at the best asset class the prior year, you switch to that asset class and hold it for a year, and you keep making that change. Mm-hmm. And when you look at from large cap to small cap, whether it's growth or value, so you're looking at 6 different asset classes, performance chasing, you would have beat only the one in the bottom seller for the last 10 years. So while all those asset classes have had reasonable returns, unfortunately, you end up being near the bottom just because you're chasing and buying things at the wrong time.
And you shouldn't do that. All right, Casey Boland, thanks so much. Casey of Hanghold Capital Management. We're looking at about 6 away from 9 o'clock news, 700 WLW.